This is John Gilbert at Security First Asset Management with a weekly market update for last week. Now, this will cover Monday, January 27th to Friday, January 31st. So a lot happened in markets last week. There was volatility, there was earning reports, there was a Fed meeting, there was an inflation report that came out, GDP numbers for the last quarter of 2024 and for the year as a whole were published. So let's start with the stock market, right? Last week, the stock market was very volatile. So domestic equity indexes closed mostly lower, although the Dow Jones Industrial Average rose modestly to notch its third straight week of gains. The tech-heavy NASDAQ Composite did not fare so well. It experienced a particularly steep drop on Monday, as there was a sell-off of tech stocks in response to the emergence of DeepSeek, which is a Chinese AI developer. Now, the reason that there is a big concern around this is because reportedly DeepSeek requires much less energy and processing power than other leading AI applications, and it was reportedly developed at a much lower cost. So that led to some competitive concerns in the broader AI space. So the news led to shares of NVIDIA falling 17% on Monday, and many other tech and AI stocks taking a significant hit as well. So on the week, the S&P 500 was down 1%. The Dow Jones Industrial Average was up 0.3%, and the NASDAQ Composite was down 1.6%. So earnings season has also continued to roll along. So there are several positive earnings surprises last week and some upbeat forward guidance. So that kind of offered a tailwind to stocks later in the week to kind of help the major indexes recover some of the earlier losses that were experienced on Monday. So earnings growth is expected to be broad as well. So as expected, there's 7 out of 11 of the market sectors have forecast to report higher earnings. So it seems to suggest a rotation in market leadership. So over the past few years, we've seen that markets have been led largely by technology, whereas over the past 6 months, the financial and industrial sectors have each outperformed the tech sector. And looking at the most recent performance, the Dow Jones Industrial Average and S&P 500 are off to a strong start this year, whereas the tech sector is actually down 1.1% to begin 2025. So also, the Federal Reserve met last week, and so that was their first meeting of 2025. They met on Wednesday, and during that meeting they announced that they were going to be holding the interest rates where they currently are at their current level. Now, this was widely expected. Fed Chair Jerome Powell stated after the meeting that the Fed does not need to be in a hurry to adjust its policy stance, and that it would need to see real progress in inflation or significant weakness in the labor market before it was going to make another rate cut. So that seems to suggest that the central bank will likely keep rates steady again at its next meeting, but only time will tell. The Commerce Department, it also released some inflation numbers last week, and so core inflation, which excludes the more volatile food and energy, the numbers on that one came out. Those numbers continue to remain elevated. So according to the report, core, which is the Fed's preferred measure of inflation, rose 2.8% year over year in December. So that is its third consecutive month that's kind of its third consecutive month that has kind of been leveled, right? That we haven't really seen any major progress one way or another. We haven't seen it progress downwards like we would like to. So the Fed still has a long-term target rate of 2%. Fourth quarter real GDP showed that the U.S. economy remains on strong footing. And on the year for 2024, GDP grew by 2.8%. Now that's down from 2.9% in 2023, but it's showing so far that consumer and government spending are some of the main drivers of growth in the United States, especially during the fourth quarter. And so as long as some of these things continue to, especially consumer spending and as long as the corporate profits and earnings continue to come out solid, things in the broader market are looking to be fairly stable and have high hopes for those things. Thank y'all so much for tuning in to this week's weekly market update. Y'all take care and have a blessed day. Bye-bye.